So yesterday we have done all this analysis. Today I'll be starting by 10 o'clock. However, before that, have a look on this. Yesterday we have analyzed this Nifty future in the morning, and as per the 1SD calculations, uh, it was coming. The reference was 7888. That time we have taken, and yesterday's low, if I can recall, it was 7832 level, exactly in this point, hardly some 31 or something it has gone, just 1 point below that it has gone. So first cycle fully you have achieved, and the second cycle, which was starting from 55, you have got till 0.618 retracement of the second cycle in the downtrend. So this is what we have achieved yesterday in Nifty, and and this is the GAV analysis of the Nifty. These two also the second cycle has given. So second cycle last target was 7830. These two also you have achieved. So on the GAV, and this was for gold. I suppose 29,105, that period we have been there. So 29,219 it was there, and so it was neither of the cycle that particular time it was recommended. However, post which it has touched this 29,200 also. So gold also you got a success. Uh, crude crude I have not noted it down. However, it is, I think it is some success we got in this crude also, but crude I have not uh, remember those things. I have not trust it. Gold, and about this is for the crude as per the JV analysis, Gann-Angle and volatility, and as for the volatility analysis of this thing. So this is for the silver we got, and silver also mid noon it has fallen below 40,000, and I think we have gone till 7,000 sorry 39,895 till 0.786 retracement level. We have also gone in the this thing by mid noon. So this is what we have. This is how we have performed yesterday as per the 1SD, as per the GAV. Any one per principle you can follow. So there the major thing what I have told you in the this smart IT tool. All this analysis whatever we are doing, we are getting one gross picture. How is the trend out of these six studies? How many are recommending to buy? How many are recommending to sell? So let me quickly look into this Nifty and summary section of the Nifty. Now 1 out of 6 is sell, 1 out of 6 is buy, 4 are neutral. So let us wait for some time. Clear trend has not emerged so far. So here it says that 7850 above you should buy, and growth cluster is 7881, and 7819 below you should sell for the Nifty for the day as per the 1SD method. Other methods will have its own different pricings. So as for the accuracy level, 1SD I am recommending. So however, overall picture says that we have not given any trend breakout in any of this principle. Looking into the Bank Nifty, so I'll just look into the Bank Nifty. So I'll be looking into the Bank Nifty. 1SD trend, it says that uh, we are in the downtrend level, 16,686 level. Buy trend is sitting, and 16,613 level. Sell trend is uh, breakout happened at 850. So Nifty has given breakout as per this Babu he is telling. So this is the Bank Nifty trend it is showing. So as for this level 16,686 above, we can think of buying. 16,613 below we can think of selling. So now also one event is pending, that Federal Reserve's FOMC meetings outcome is due. So that is underway. So that's why the market is little in the indecisive mode. However, if you enter the trade Nifty future, if you are buying, do not forget to hedge it with the option. Since you are in the last leg of settlement, hedge it with the 7850 put option. Hedge it with the 7850 put option. And same way, if you are entering into the Bank Nifty also, try to hedge it with specific options. So now moving to this uh, option strategy. So option strategy section, we should have some objective for the trade. We should have some objective for the trade. So why we are initiating a strategy? It is for best risk management. That is the aim of our forming the strategy. So like any kind of education you take, the end result is you want to earn money. Whether you take engineering education, medical education, management education, at the end either you will be doing your self profession or you will be landing in a job. The end result is it should be converted to a performance based uh, salary or success in business or anything. So end result is based on all your different skills, you are culminating one point that my success should be translated in terms of the earnings what I should get. So no one saying that yes, I have done research, I got a doctorate, everything I got it, but I don't want to earn anything. After getting all these things, what do you want to do? If you ask that person, if he say that no, I don't want to do anything, means that kind of things is very rare, because everything has to be translated in terms of its profit or the money. So same thing, whenever it has an objective, when you take any education, you have an objective. Why you are studying that? What you want to achieve by this? What compel you, or what is the driving force or inspiring factor behind taking that education? All these things is also a part of your study. So same way, whenever you form an option strategy, you have only one job to do a risk management. Do a very strong risk management. Your objective is to do a very strong risk management, post which you have to earn something. When it comes to the risk management, I have already told you in the theoretical session, you have a delta neutral approach, you have a vega neutral approach, you have a theta neutral approach. So delta, whenever we talk about the delta neutral approach, delta stands for your change in the option premium with respect to the underlying asset price movement. Vega means with respect to volatility, theta means with respect to time. So now here, once I move to the next series, so I know that now this series is going to end. I have very less days left out. So today is Tuesday, Wednesday and Thursday, only 2 days are left out, and I have to 2 days I cannot plan any kind of strategy. It requires 3 to 5 days minimum to have a maturity on the strategy. Suppose if I am planning for a next day, means next month's series for entering any trade or any business, then how I will plan it, how I will plan it, that is more important. So that planning comes into effect in this order, that once I will be going for a strategy formation. So that time I may think of a delta neutral, I may think of a theta neutral, I may think of a vega neutral. So let me think in all three aspects of these things, and one by one I will be telling you. Suppose I am taking the Nifty. Why I am choosing Nifty and Bank Nifty? Because the liquidity of the options is more in the Nifty and Bank Nifty as compared to the other segment. So you can say, if you can take any stocks also, there is nothing wrong in that, but the liquidity of this index options are more, especially in the Nifty. So Nifty, you have 7893 future, and I'll go for a Greek scanner. So as for these things, as per the trend, whatever the things, if it, whether it is a uptrend or a downtrend, whether it is an uptrend or downtrend. So we have to take a call on this uptrend or downtrend. So here I have just taken a future. I have just gone for a Greek scanner. I got all info here. So I'm getting here that yes, Nifty is at 7,893 level. So it has a delta of 1, and I'm at a different call options I am having here. So suppose if I want to sell Nifty and with specific options to make it as a delta neutral, then the best choice will be I can sell this Nifty future one lot. Along with I can buy call option of 8,000 strike, which is having 0.47 as delta, buying of 2 lots. So if I can do that, and I can 3 to 5 days period, if I can have a performance analysis, I can get in this order. If it is go to 7947, this is my profitability, 80, this is my profitability. So as it moves on, then my profitability in this order it moves. However, whenever it falls down, it is also having this particular profitability. I'm just taking it as a number of holding days are 5. So this is a 5 calendar days I am going to hold. In these 5 calendar days, if Nifty move in this particular band, so 1947 to 1839, then I have this kind of performance. In this 5 calendar days, starting from today, if it moves in the 7980 to 7805 level, my performance in this order. However, so this is, however, you can say here we have not done a proper time value management, though we have made it as a delta neutral. Delta is neutral now. However, how much money I am paying to the system, that is very important. So 85 rupees per lot, which is totally out of money, 7893. So I can say it in 2 lots. So 170 points of money I am giving to the system. So this much of time value I am giving to the system, and if I get the profitability, if I'll get the proper value in that, so if I get the proper 170 point move, then only I can make some profit. But what is lacking here? I paid 170 points of time value to the system, to the market. However, I have not received anything from that. This 170 point what I have paid, it is going to be absolutely zero at the end of May series. This 170 rupees is of a perfect time value. So how best we can manage this delta? So though I want a delta neutral, same time I do not want one great exposure in the time value front. I do not want that my trade should be exposed much to the time value front. So that is what I need. So for that reason, so this is not a wise idea to form delta neutral using the future and call option at this particular time in this particular order. Say now trend is suggesting that okay, we are uptrend started, 7852 has started. So for intraday basis it is uptrend, though we have not entered in the weekly basis, we have not entered to the uptrend. For intraday basis we are in uptrend, as for the intraday basis. So look into these factors very carefully. I have a 8000 call which is having 0.47 as a delta, or 7850 call having 0.65 as a delta, 0.65 as a delta. So if I can do in this order, 7850 I have 0.65 delta. If I can do in this order, if I just buy 7850 call option and sell 8150 call option, so it is almost zero I am bringing. So instead of this one, if I just buy 17850 call option, one lot, and I am going to sell 8150 call option, 2 lots. So delta terms, 8150 call option, 0.28, 0.59, round it to 29, so 30. So almost my delta is coming to 0. So this is the thing, if I am just calculating, yes, once it moves up, it is giving me the losses if it is moving above above you can say 8,000 or 7,980 above. However, this is also you can say some 300 points are there. So 300 points are there in this basis. I am just making some adjustments here. So sell 2 lots. So here I have taken the future also. I have to reset the positions. That will be because future also got added there. So that's why you are getting a not a true projection. So here 1 lot and here call option 8150 call option sell 2 lots 5 days. So once we are moving in this particular band, it says that now the money involved in this particular trade is only 1372, means 156 points I paid, 7850 call option. This 156 point also is totally a time value 156, because considering Nifty is currently at 7850, so 156 I have paid. Out of that, so 70 points I have recovered this. So 6 and here 8. So 86 is the point, 86 point of time value only I paid. This time value is going to be an absolute loss for me if Nifty falls down to 7,500 or 700 range, whatever may be the case. So then this is the 86 into 75, this comes to my net investment. However, if Nifty makes a gradual progress towards 8,000 or 8,040 or 8,070, till this point I have a profit, I maintained a profit here. Till this point I have maintained a profit here. However, this is taken with reference to, so this is taken with reference to the current IV. So now so it is reference to the current IV, hence it is projecting a lesser profit here. However, profitability will be little more once it is going to 8070, 8043 level or even 8,000 level. So profitability is going to be more as for this particular method. So what is the best thing you have done by this converting, though it is a delta neutral, but in theta also it has managed properly. By converting a strategy to a ratio call spread, you have maintained the theta properly. So here, so little I'll talk about the theta. So this theta, so see the individual theta here. So theta terms that how much time value decay you can experience for a day. Per day time value decay, what you are going to experience. So it is telling that time value decay in 8150 is 2.42, 7850 it is 3.58. So if I can say that 3.58% of the time value, 3.58% of the time value you are decaying in the buying side of the option. So 3.58% of the time value you are decaying per day in one option. However, same time 8150 also is having a 2.42, so you are just making 4.8. So 4.8 percentage of time value decay you are gaining from the selling side of the option. You are buying side of option resulting a 3.58% of time value decay per day. Selling side of option giving you a gain of 4.8% time value decay per day. However, by this process itself, you are making it as a delta neutral. Along with also you are gaining some theta value. Positive theta means you are gaining something value from the time value. So when the time value decays, you are gaining from that. So one segment of profit is being contributed towards your trade by this process, provided trend should be up. If trend is down, then you have to ratio put spreads will be beneficial with positive theta, little positive theta. So that means you are going to gain little bit money from the time value decay. So 4.8 means 4.8 on the base value of 36 rupees. Here 3.58 means 3.58 on 156. So 36 into 2 you have. So you have 70 to 80 rupees. On 80 rupees you are getting 4 rupees gain, and here on 156 rupees you are losing almost 4 rupees. So 4 rupees 50 paisa. So net time value terms 150 paisa of loss you are carrying if price never move above 7,850. So this is the idea behind that. So now coming to the Vega. So Vega neutral cannot be formed in a low volatile market. When the volatility is more, when the volatility IV of those options are more, that time we can think of forming a Vega neutral strategy. So those Vega neutral, whenever you are forming, so specific same way you have to do the analysis. From the grid scanner you get Vega. So each 1% decay in the volatility, how much percentage fall will bring in the premium. So that is what your Vega says. The definition of Vega says that each 1% fall in the volatility. How much percentage fall it will bring in the premiums and option premiums? Time value component alone. This also you have to keep in note. Time value component alone. So this time value component, how much percentage decay it can bring. Same way, each 1% rise in the volatility, how much percentage gain it can bring in the time value component of the option. That is also been noted as here as Vega. So whenever you are having certain strikes, you can see, look at here, 7,500, very low Vega. However, once it moves to 7,600, okay, 4 it is acceptable. 7,700, 750, 800, 850, 900 till 8,150, or you can say till 8,300 or 8,200, you can say till 8,200 you have a Vega which is great in nature. So 7 to 8% of the Vega it flies in this particular basket of the strikes. All calls 8,200 to 7,700. All these strikes are having a Vega between 6% to 9%. So this is the thing it is telling. And maximum Vega you are having on the 8,000. 8,000 call option is having the maximum Vega here. Suppose this is a 9% decay in the time value. It happens if the price, if the volatility fall by 1%, then this option can decay by 9%. So once you get this idea of this Vega, whenever you are forming any option strategy, suppose if I am telling that you sell a future, buy a call option. I am telling, suppose at any point of time if I am telling you sell a future, sell future and buy call option, buy call option. So whenever you talk about the future, the theoretical book says that it doesn't have a Vega. However, I do accept that daily volatility of a future is considered as a Vega. That much of factors you have to take into account. Suppose daily volatility of future is 1.5% and you are hedging with 8,000 call option which is having a Vega of 9%. 9%. Selling a future, you are buying a call option. Suppose in this order, and Nifty has got consolidated in that band. So net basis, 7.5% of the time value will go on decaying irrespective of your hedge. If Nifty is not moving any direction, every day basis on 7.5% of decay you may expect in this particular things. So for that reason only, just though you have very limited choice from between now Nifty you are selling means you have a choice 7,800, 850, 900, 950 and 8,000. But out of these five options, five different options, choose an option which is having a lower Vega. So whenever you are hedging with a future, a put option or a call option, though you have a very limited choice, only couple of strikes will be available, but try to hedge it with the option which is having a lower vega as compared to other. So in this particular case, if you are going on hedging the things, then you can say that 7,800, though its premium is quite high, but it is the best choice as compared to 8,000, because 8,000, if the Nifty climbs to 8,000 also, this vega factor of 9% is going to spoil a lot. So that is also is a very short butterfly, ratio call spread, ratio put spread. All these strategies are recommended in the first leg of the thing because premiums are very high, time values are very high. Or forming a theta neutral also is recommended at that particular time. However, with a plain covered call also you can take it. Covered call, covered put, this kind of things. Covered call means you can form in this order. Say if you are buying a future, now say it has given a uptrend, buying one lot, and the maximum 8,000 call option is having a great vega, so you sell one lot here. One lot you can sell here. So by this process it has reduced something, and buy a put if you wish to buy a put 7,800 or something, buy a put one lot. These two also will give you a great freedom of your uh, money. So though it is a so so you have bought a put option and you have sold a call option, and also you have bought a put option. So in this case, though it is a theoretical estimate says here, so you can say here 7893 level you are buying, 85 points you are protected. So near 200 205 points is the maximum loss you can get it here. This put options is sitting here. So whenever there is a uptrend breakout is happening, you can think of a covered call with a put hedge strategy also. These two also, if you make it delta neutral, it is better. If you make it vega neutral also, it will be better. If you make it theta neutral also, it will be better. But any one Greek you have to neutralize. Any one Greek you have to neutralize. You cannot neutralize everything. However, you can neutralize any one Greek. That is the first thing you have to do. So any one Greek must be neutralized for effective option strategy. So other than these particular strategies, we have many other strategies we have given here. Uh, so like calendar spread. So many scanner type of strategies you can find out in our option strategy tool. So suppose you have just select the Nifty, and yes, we are in the last leg of this settlement cycle. So you can say that uh, so we are in the very last leg of the settlement cycle. So for that we are getting some kind of so so this is that is we are in the last leg of the settlement cycle, so you cannot able to uh, make any this kind of calendar strategy now. However, if you're in the first leg of strategy, you can form uh, calendar spread strategy, cross calendar strategy. So these are the 20 techniques what I have given in the book on futures and options. That 20 techniques. So what that technique says, it is there, and based on that, it forms 4 pairs, 4 to 4, 8 pairs. Out of that, you have to choose any best pair. So here you have the strategies. You can say uh, so the calendar spreads also you can form. Calendar spread in the sense if you are uh, buying for means this month and next month. So that so this is calendar current month and next month. Suppose if you are buying a call option of 16,600, if you are buying, which is 146 now, and next month call option if you are saying that 17,000, though you do not have time now selling one lot. IV is 19%, we are going to hold up for 5 days or 7 days. So how does your uh, calculations are going to yes, now it is, you can say, uh, number of lots what one I can take. So if I'll give these combinations, I can get that how much how this combination is going to give me the profit or loss. So that is also, this facility also we have given, so that cross calendar strategies you can form, and cross calendar strategies are very safe strategies, and it has great ability to give you the success, because it makes your process of making delta neutral very easy. Theta neutral, vega neutral, anything you want to do, it can make very easy. Cross calendar, if you are calendar strategies whenever you form, different months strategies when you form, it make your process little easy. So all these features you get in this particular awesome strategy software, and you need to read a lot in this, because this is a risk management technique. It is not a straightforward tool that you buy here, put a stop loss, and just these are the targets and all. You need to read a lot in this. So for that we are giving you a very formulated material along with this. You get near about some 10 to 12 hours or more than that, around 14 hours of course, English and Hindi together. It is there. English is there, one part of Hindi also there. This is the only one material we give, wherein we give the Hindi version of the courses also. So you can get those things, and you have to understand those terms very carefully. So it takes few months for any individual to get expertise in this. However, very carefully, if you can study that, then you can learn many things. So regarding the products of Smart Finance, already you'll be knowing that all 12 varieties of product we have. And this feature and option course, if you want only course, this comes at a price of 3,000. And with this option strategy software, what I have demonstrated you, with that it comes to 10,500. So 10,500. So very objective of the option strategy is to do a proper risk management. Same time, your rewards also used to be very great rewards used to get. Even though if I say that if there is a 50-50 probability of success and failure in option strategy formation, still the trader makes a profit. If 10 strategy you take and 5 failed, 5 win, still the trader makes a positive profit. So still the trader makes a uh, uh, so that makes a profit. So more the complex the strategy will be, more you will be concerned about the risk management. So that's why it protects your capital to a great level. And it is only for the advanced traders. Option strategy is only for the advanced traders, those who can able to understand those concepts. It is not for the traders that who cannot able to understand those concepts of delta, vega, theta and all. If that is the situation of yours, then this concept better do not touch it, because if you are not able to understand those things properly, then do not implement those strategies with the ambition of profit. It is better to avoid that. So that is the thing is very important, and you should know when to form what strategies. That is also I have told you. When you are in the first leg of the settlement cycle, as I have explained you have two choices. Though trend has given a uptrend breakout, if you are telling me, shall I buy a future with a put option to make it delta neutral, or I can form a ratio call spread. So then I will go for a ratio call spread. So if I'll reason is, if I am buying a future with a put option, the time value what I am paying to the system is more, so it may not be beneficial. Though it is delta neutral, same time the vega decay will be more. So to manage that, I told you, at one point of time you have multiple options available in your hand, multiple ways available on your hand, multiple ways you can think on the market. You are correct that yes, trend has given uptrend breakout, That is no doubt about that. However, we also need to look into that time value, what we pay and what we get from the market. So for that I have told you the example, selling a future and now buying some 8,000 call option, two lots also doesn't benefits us in the falling market because we are paying for an option which is having a higher Vega. So Vega decay is 9% is expected in this particular strike. So in this particular situation, instead of going for this, if I am just going for a ratio put spread, means if I am buying 7850 put option and same time if I am selling some 7500 put option, two lots by the process of same way to bring it to delta neutral, then also I'll be get benefited because my Vega will be get managed. So that is what I have told, that is the major thing you have to look into in a strategic trade. When you are forming delta neutral, the mistake is not lying in the delta neutral. Mistake is by the process of forming a delta neutral, we ignore the theta part, we ignore the Vega part. And three things you cannot do, you cannot do a Vega, theta and delta, three things in neutral, just implementing one strategy. For that it is possible, but it is very complex. You have to go for a very complex build-up. So for that, look into all the possible strategies which you can able to form and look into the strategy which is in the terms of Vega, in terms of theta, also uh, little means flexible in that terms, which protects your time value component of your money, then it will be a good implementation. So that is what I told you. So this option course you are getting in the Smart Finance option course, you are getting with this option strategy software. So option course, if you are going, if you are getting one just course and one manual software wherein just manually you can build up some strategies and you can just use it for your studies. And option strategy software, you got a course and you got a software for that. Besides that, all other courses are there. If you are really interested in learning, if you really want that, yes, I used to make some uh, intelligent decision in my trade. I just want to learn, equip myself, then to trade instead of depending on some other fellow's call, instead of looking at TV channel and taking a decision. So I need some authentic method which can guide me for my trading career. If you are aiming for that, then you can go with our course and softwares. So if you are taking all products together, you get a hefty discount of 63% in 17,500. You get all our learning materials, 6 printed books, 18 DVDs along with all our softwares. Softwares are real-time softwares. The way you have seen it, same way you can get it. So many methods are there. Any one style you have to follow. If you have a great trading capital, then option strategy is must for you to use. And if you are just going for a weekly trades and other things, you can use our uh, 1HD software, which is also equally powerful and gives a great result also. So gives a great result also. So this is by that process you can also uh, take the benefit of our softwares. Any and sell 8,200 call option of June one lot at that time. Currently buying 7,800 put option of May, selling 7,600 put option of June, each one lot is advisable. Book the loss in this particular strategy of put option if the Nifty try to cross that 8,000. If Nifty crosses 8,000, that time you, this cross calendar strategy, you close it, go with the 8,000 call option and 8,200 call option of June, buy 8,000 call option May, sell 8,200 call option June. This is best because currently your time values on those options are great. So you cannot take a great risk in terms of Vega or theta. So this is for the first weeks. So this is what you can do currently, or you can form a ratio call spread or put spread. Currently we are in downtrend. Thinking on that, if you are selling that 7,800 put option, you are buying one lot for May. So May, and you can sell 7,600 put option of same May, but two lots here, one lot you can buy. So this is ratio put spread. This also you can do based on this trend breakout, but do remember, once it is crossing 8015 level as per the trend, you need to close this strategy and come out. That time similar strategy you can form in the call side. This is the best strategy currently you can take for the month of May. Yes, this is having great time value now, so you cannot take risk in terms of vega or theta addition, vega addition you cannot able to do. So this is the best strategy for next month first week.